Hi, Glenn Sanford here, founder of eXp Realty, CEO of eXp World Holdings. You know, right now we're kind of at a really interesting inflection point in residential real estate. We've got interest rates rising fastest they've rose since I think the 90s, maybe even the 80s. We've got a bit of a slowing housing market. However, we look at when eXp was started. We started eXp in 2009 at the bottom of the housing market. And we did it to actually create a model for real estate that literally could be successful in any market. So whether it be a slowing market, which we're going through now, obviously we did well, and the expanding market that we've had for the last 10, 11, 12 years, the market's been expanding. And this next downturn, I think one of the things that I think about is the idea that we really created a new model in 2009, and a lot of people said it's not going to work, and we internally knew it was working because we were growing agents every month. We were growing our transaction count. The types of agents that were joining us all the time were improving over time. So we knew we were onto something that was going to work over time. And recently I was thinking a little bit about, when a new model is started, when you think about, I'll talk about Amazon, Amazon and Netflix, two models that started, really during the .com sort of era. So you got Amazon started, whatever it was, in the 97, 98 time frame. Netflix was sort of in that same time frame, but it took almost 20 years for them to really get to their critical mass, their market size, before competition really started to show up on the scene. So we started eXp in 2009. We're now coming up on 13 years. In October, it'll be 13 years. And we're now in this next downturn. I think that's going to be the downturn where we actually start to see competitors actually change their cost model in order to grow their brokerage, to grow their model, to be sustainable. It's hard to justify a 6 or 7% franchise fee and then a 70-30 split with your agents, and then be able to pay for your bricks and mortar when you've got a company like eXp out there, charges no franchise fee, has an 80-20 split, has a rev share model, has an equity model, and effectively has put the agents in the position of broker-owner in a number of different ways. And so when you think about, what's the next generation of real estate brokerage going to look like? Well, we're already in. I mean, obviously there will be another generation of brokerage at some point. But we're 13 years into what potentially is a 20-year run to where we get to kind of, we'll call it our large size brokerage. And so, that's still another 7 years off. We look at the idea that the next 5 years or so, we could be 500,000 agents. We're going to be in 100 countries eventually. We will be the largest single real estate brokerage in the United States, largest single brokerage in the world, certainly the largest brand in real estate in the world. We're already the number 3 brand in the U.S. by agent count. So next year, we'll probably be the number 2 brand. We'll probably most likely pass Coldwell Banker and be the number 2 brand. And then, then another couple of years out, maybe by 2025 or so, we should be the largest single brand in the United States. So, Keller Williams currently has that, position in the marketplace. But my guess is that we'll be there. And it's really just because we put the agents first. Agents have been the number 1 focus for us from day one. It's kind of an interesting paradigm too, because when you think about it, we're doing this. I'm doing this video at our shareholder summit, and most companies, they say, "What's the purpose of a business?" And the purpose of the business for most people is to quote unquote make money. And you think about, what does that mean? Well, who does it make money for? It's usually make money for the shareholders. And the ironic part is that we're actually building this company for the agents. And what's also interesting is because of that, our shareholders are actually winning more in eXp than they win in virtually any other brand. So if you look at the fact that we have a higher market cap than Compass, than Redfin, than Remax, than all of was actually higher than all of these different real estate brands. And we did it with no debt. Obviously, we go no bricks and mortar to speak of. And then you think about where we're going right now. We're going into the slowing market. We're going into certainly the housing market is going to go into a recession. You can't go from 3% interest rates to 6% interest rates and not change the velocity of real estate transactions. It's physically impossible for those not to go down. And so you're going to see these companies, some that carry a lot of debt, some that carry a lot of fixed bricks and mortar expenses, and they're basically going to be struggling. And potentially, we could see some big names going out of business the next 4 or 5 quarters. Names that have raised over the years hundreds of millions, if not over $1 billion of money for their enterprise to kind of build their model. And EXP, we never raised money. We did a little small friends and family round back when we started. It literally was $150,000. I mean, we're talking very small. In 2008 to 2009, while we built the EXP model. I think in early 2018, we did another small internal round as well. We weren't going out to Wall Street. This was all agents, brokers, and staff that put money in. And we've taken on zero debt. And all of that really plays into the idea that we're super agent-centric. The most important part of the equation is to make sure that the shareholders of EXP, the primary shareholders, the ones that we're in business to support, are the agents and brokers that normally in any other company, and you can look at every other single sizable public company that's out there, and you look at how much equity is actually owned by the agents, brokers, staff, and it's usually in the single digits in terms of percentages. Now, EXP, you look at our founders, our agents, brokers, staff, we're well in excess of 50% of the ownership of EXP is owned by our agents, brokers, staff, and founders. And you think about just that one statement alone, and you think about the fact that we have the largest single market cap of any single real estate brokerage, and it's our agents that have that ownership stake. It's not Wall Street, it's not hedge funds, it's not venture capitalists, it's not private equity, even though they can become shareholders because we're a publicly traded company, but the majority of our ownership is us. And so that means that when we're playing to win for our shareholders, we're playing to win for our agents, brokers, and staff as well. So it's pretty cool to be able to have an aligned compensation model top to bottom.